In this market update, I'm going to be taking a look at the SP 500 and at what a Hurst cycles analysis tells us to expect. My name is David Hickson, and today is the 20th of September 2018. Before we take a look at the market, I must ask you to please make sure that you have read and understood these disclaimers. Here is the default analysis of the SP 500 performed with data up to the end of the 19th of September 2018, which was yesterday. I've been discussing this analysis in webinars over the previous many months, so I'm not going to dwell on the details in the interest of making this video shorter and more informational. But what I am going to do is point out what the analysis is telling us to expect. And so the first thing that this analysis is telling us is that a large peak formed in January of this year. It was at least an 18-month cycle peak, or it might even have been a 9-year cycle peak. It was certainly an important peak. Since then, the market came down and formed a low point. The exact position of the low point was difficult to determine because of the nature of the price action. But what has been clear is that price has been rising since then and is now rising up towards this peak of the 40-week cycle. This is the nest of highs, and these are the circles and whiskers for the 40-week cycle and all shorter cycles. And the market is moving up into that nest of highs at the moment. After which, of course, it is expected to form a peak and turn around and come down to this 18-month cycle low, which you can see at the moment is expected in early 2019. Although, obviously, as new data comes in, we're constantly updating our analysis and updating our understanding of what the cycle wavelengths are. And so the exact position of that 18-month cycle trough is going to change as we receive new data. Something very worth pointing out is the fact that we have an 18-month circle. This is, of course, the circle and whiskers for the 18-month cycle trough. The circle represents the exact day that the trough would form based upon the recent wavelength that that cycle has been beating with. You will often see this kind of situation where you have a displaced circle above a very neat nest of lows for a shorter cycle, but there are one or two cycles missing, if you like. That kind of situation is something worth paying attention to, because those troughs will often prove to be fairly important troughs, and as the market comes down to form this 80-day cycle trough in early November, we will need to be on our toes just in case this circle for the 18-month cycle trough turns out to be important and well positioned, and that trough might turn out to be an early trough of the 18-month cycle. Now, if you're not familiar with looking at diamonds and triangles on your chart, please take a look at the other informational material that we have on YouTube and on our site, sentienttrader.com, and inform yourself in terms of how to understand a Hurst cycles analysis. It's a very valuable and important process. But there is a simple way of taking a look at what this analysis is telling us in Sentient Trader, and that is to display something called the composite model line. The composite model line takes all of the cycle information from the analysis, it recomposes it, and it tells us that if the only thing affecting this market was the cycles, then this is what would have happened in the past. And if the cycles keep beating with the same wavelength and the same amplitude, then this is what's going to happen in the future. So it's a very useful tool for visualizing the implications of the analysis that you see on your chart. It's very important to bear in mind, of course, that it is based upon the analysis on your chart. And so if the analysis is incorrect, the composite model line will obviously also be incorrect. Nevertheless, the composite model line here is showing us with this line, and I'm going to draw over it in case it isn't really very visible. It's showing us the expected price action over the next few months, which is effectively that price is going to rise into this 40-week cycle peak, which is expected over here, and you can see that's in about the middle of October, after which the market is expected to turn down and come down into this trough, which is the 18-month cycle trough. So the composite model line is telling you exactly the same thing that I described a moment ago without the visual aid of that composite model line. Now there are a few things to point out, and let me zoom in a little bit, and on this more detailed view we can see the same situation, which is that the market is expected to rise up into the 40-week cycle peak and then of course to fall. The big question is, when exactly is that 40-week cycle peak going to occur? Should we simply sit back and wait until the middle of October, which is when the composite model line is peaking, or might it occur a little bit earlier? Well, there are several things to consider. The first is this circle for the 40-week cycle peak, which indicates that that peak is actually expected to form sometime next week. So that's based upon the recent wavelength that the 40-week cycle has been beating with in terms of the peaks that have formed in the market. And again, we see a situation where the circle for a peak is hovering above, or in this case below, a small nest of highs for the 40-day cycle. So this, of course, is based on the fact that the 80-day cycle peak formed here at the end of August, and what we would expect then is for price to come up into this 40-day cycle peak. When that peak forms, we need to be careful, we need to be aware of the fact that a 40-week cycle is due, and therefore we should be standing by in case that cycle peak forms and ready for the formation of an early 40-week cycle peak. The important thing about trading with Hurst cycles is that they give you an expectation for what is going to happen in the market. It's helping you to understand what is likely to happen and when you need to be aware of potential turns in the market. When those turns happen, you should be careful not to sit back and say, well, I'm only expecting this peak in the middle of October, and it's now 3 weeks early or 4 weeks early. So the point is that you need to be standing by. The other important thing that I must point out is that Hurst analysts are looking ahead to the next cycle event, which in this case is a 40-week cycle peak. That doesn't mean that I'm bearish yet. I'm not saying we're bearish this market because of this strong move down. All right. What I'm saying, of course, is that the market is expected to move up, form the peak, and then turn down again. The other interesting thing to note here is that there have been 232 bars from the previous peak. That was the peak in January, at the end of January. That's 33.1 weeks. The average length of a 40-week cycle is 273 bars. So we're still 41 bars or 41 days, because this is a daily chart, away from the average length of a 40-week cycle. So indeed, we still have some time to go, but if that peak was to form today, then it would be only about 15% early, and 15% is not a very big variation for a cycle wavelength. There is another bar count over here of 97 bars or days, which have elapsed since this 20-week cycle peak over here in the middle of June. Now, the average length of a 20-week cycle is 136 days. And so here too, we are looking at the next peak of the 20-week cycle forming in about 39 days. So again, we are given the expectation that the market still has a bit of time to play with before it rises up and forms its peak. When it rises up and forms its peak, how will we know? Well, the best way of determining whether a peak has formed in the market is to use one or other of our cycle tools. So first of all, let's take a look at some levels based on the FLD. There is the 40-week FLD, but we do not have to wait for price to cross the 40-week FLD for confirmation that the 40-week peak has formed, because that 40-week peak must be synchronous with a 20-week cycle. And so there is the 20-week FLD. But again, that peak will be synchronous with an 80-day peak. And so we can focus our attention on the 80-day FLD perhaps, which you can see reaches up to the current market level in about 2 weeks' time. And so the point at which price crosses down below this 80-day FLD will be the point at which I would say with some confidence that the 80-day peak has formed in the market, certainly, but that is probably synchronous with the 40-week cycle peak. Of course, stock markets are synchronized according to their troughs and not according to their peaks. So there is a little bit of a gray area in terms of confirming the magnitude of peaks. Nevertheless, because we are expecting a peak of the 40-week cycle, if price drops down below the 80-day FLD, I would be fairly confident, depending on the nature of the price move, that the 40-week cycle peak had formed in the market. Our other cycle tool is the VTL, or valid trend line, so let's take a look at that. We have an 80-day VTL over here, as you can see. Let me zoom in, and this is an interesting VTL because a VTL is drawn from one trough to the next trough. But you can see that this VTL has been displaced downwards ever so slightly. It doesn't quite touch that trough of the 80-day cycle or 20-week cycle in the first week of September. The reason for that is because of one of Hurst's rules, which states that the VTL must be drawn in such a way that it does not cross price action. And you can see the low of this bar over here in the middle of August would be breached ever so slightly by that VTL if it was drawn down to that low point. So that is the 80-day VTL, and when price crosses down below the 80-day VTL, it provides us with confirmation that the 20-week cycle peak has formed. So that's going to be really useful information for us, because of course we want to know when that peak has formed. And you can see that in yesterday's price action, price came down and just dipped just a couple of points perhaps below that VTL. A Hurst purist might tell you that that means the VTL has been breached. I'm not quite such a stickler for the rules, and so I will continue to watch price action unfold and wait for a more positive cross down below the 80-day VTL. At which point, of course, I would expect the market to come down to form the 18-month cycle trough, which is expected. We can see at this zoom scale a little more clearly. It's expected early in 2019, but there is also this 80-day cycle trough, which is expected in early November, with, of course, this 18-month cycle circle, which we need to bear in mind. Now, the speed of a move is determined very much by the amount of time between the expected peak and the expected trough for the main movers or motivators in that move. In other words, the cycles that are most influencing price to move. So these are fairly big cycles that we're speaking about, a 40-week cycle peak down to an 18-month cycle trough. Now, when we have a short period of time relative to the magnitude of the cycle, and here we're looking at a period of time of 2 to 3 months, which is a fairly short period of time relative to the 18-month cycle, and in that short period of time, price is going to be moving from a 40-week cycle peak down to an 18-month cycle trough. Because it has very little time to achieve that move, it could be a fast and fairly dramatic move. Let's zoom in a little more and take a look at the 20-day FLD, which is a very useful FLD for working out exactly what price is doing. And you can see here that price has possibly formed a 20-week cycle trough over here. It might not be 20-week. In my opinion, it might only be an 80-day cycle trough, or maybe only a 40-day cycle trough. Nevertheless, it's a fairly important trough in terms of our daily chart. Price has then come up to cross over the FLD, which it did late last week, as you can see, and it's then expected to generate a target to the upside over here following the cross of that FLD. You can see that price did something that it very, very often does after crossing an FLD, which is that it came back to the FLD over here and it literally just touched it before continuing on its way upwards. We would expect price to achieve the target of this move. If price fails to achieve the target of this move and instead turns down and crosses down below the 20-day FLD, then we will question the magnitude of this trough and say that it was probably only a 40-day cycle trough, because that is the kind of price action that we would expect following the 40-day cycle trough. Now I have another analysis which is very similar, but it shows us a slightly different chart analysis, so we'll just take a minute to take a look at that. We won't spend too much time on the details, but you can see here that our composite model line is showing us pretty much the same expectation, a peak which is expected to form in about the middle of October, followed by a move down into the 18-month cycle trough, which is fairly sort of spread out over the bottom of this chart over here. The trough analysis differs on this chart, and you can see that in early November we're expecting not an 80-day cycle trough but a 20-week cycle trough, and here is the 18-month cycle circle floating above the 20-week cycle trough nest of lows. And so that's going to be a really important move to watch. This analysis is certainly warning of a potentially strong move down into this trough in November. It is quite possible that that might turn out to be a trough of the 18-month cycle, in which case, of course, the market will move down even further, and it could be quite a nasty move down. Let's zoom in, which is really the reason why I wanted to show you this chart, and turn that line off, and let's take a look at our 20-day FLD, because even though we have a different analysis, you can see a very similar sequence of price interaction with the FLD. In this analysis, we have only an 80-day cycle trough. Price crossed up above it at the end of day last week Thursday, and it came down, almost tapped it, and now it's continuing on its way. We would expect it to achieve the target of that move up, which would be at this level over here, just below 29.40, and that would be a fulfillment of that price crossing above the FLD. If price fails to reach this target and instead turns down and crosses below the 20-day FLD, then we need to be on our toes, because it is possible that this was not an 80-day cycle trough but only a 40-day cycle trough, and that we are going to see a move down sooner than expected. Here is the 40-week cycle circle for the peak, indicating that we should be standing by for that peak to form in the markets. I do hope that you found this market update interesting and useful. If you have any questions, please don't hesitate to put them in the comments below the video, or send us an email at sentienttrader.com or hurstcycles.com.